Ladies and gentlemen, Greg Michalowski from ForexLive.com. Today's date is January 4th, 2024. This is a Kickstart video where I take a look at three other major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. We've seen some better employment data as we head into the U.S. jobs report, which will be released tomorrow. The ADP employment came in higher than expected. The initial jobless claims was lower than expected. That's stronger employment. And that has yields moving higher. We have the 10-year yield now up 8.2 basis points, trading at session highs, and stocks lower. The stocks just can't get a break. It seems like good news is bad news and bad news is bad news. So the S&P is now down about 4.56 points. The Dow is up about 72 points, and the NASDAQ is down 74 points. So what has the U.S. dollar done? Well, looking at the euro versus U.S. dollar on the hourly chart, we had seen the euro move higher here and trade up back toward the 38.2% retracement of the range since the December low. It's back here to the December high right here. Now that move to the upside was spurred on by a break of the 50% retracement level of that same move to the upside. Also, the 42 level, recall from the daily chart, the 42 level represents the 50% midpoint of the move down from the 2020 high to the 2022 low. That's this level right here. I earmarked it as a key level yesterday in trading, and indeed the price, when it broke above the 50% retracement on the hourly chart, we held it below the 42 level here before moving down to this swing area here. So things were looking more positive here into the European session, but then we started to see some German and French CPI data, which came in a little bit weaker, and that forced the price down. And you can see the current hourly bar with the stronger U.S. data has taken control, with the price moving back below the 42 level. However, that 50% retracement level is holding support, and that is giving some traders some hope that maybe, well, there's an opportunity to buy the dip, perhaps. The level also corresponds with this swing area through here. We had swing highs and then other swing highs right here, forming a ceiling here, and then we moved above that level and formed a floor here before moving to the upside. So that's a nice key level right around the 50% retracement level. So technically speaking, the price is holding the 50% retracement, holding the swing area. Maybe intraday buyers are leaning against that level in hopes that the price moves back to the upside. We will see. But in contrast, if it does go below that level, that would be more bearish and lead to further downside pressure. So this is a key barometer, and so far it's holding support in the euro versus US dollar. Let's take a look at the dollar versus yen. And we had forecast that the dollar versus yen was more positive above the 200-day moving average in the early Asian session. The price did move below the 200-day moving average through here. Now, that's at the beginning of the Asian session, and that can be, somewhat, as the market sort of gets its legs. We did move below that level, and it did tilt the bias a little bit more to the downside. But what is important here is that the market fairly quickly rebounded back to the upside, and we started to use that 200-day moving average as support here and both here. And the price has since moved to the upside, and the current hourly bar is trading to new highs after the better than expected data this morning. If I take a longer view look here, you can see that the trend moved down from the November high all the way to the low price that we saw at the end of December. That's a nice big trend to the downside, and as most people know, I like to see trend moves followed by retracements that get to and through the 38.2% retracement. So that 32.2% level is our next target on the top side. The level comes in at 144.698. This high right here came in just short of the 145 level, and so those are the next key targets on the top side for the dollar versus yen. If we get above those levels, that's more bullish for this currency pair, and we should see further upside momentum if we come up to this level and find the sellers leaning against that level. That would give us a clue as well that perhaps there's a stall point here after some pretty decent gains over the first 3 days of the trading year. But certainly the buyers are more in control here. Watch this level right here as close support, 143.92 to 144.09, above and below the 144 level. Keep that level in mind as an intraday support for traders today. Finally, let's take a look at the sterling versus US dollar. Again, I'll go to the hourly chart, and as you can see, the price action was to the upside here in the currency pair breaking above both the 100-hour moving average and the 200-hour moving average. That was should have been more bullish, and indeed it was. And we went up to this swing area here, which it's kind of messy through here during this week and last week's end of last week trading. But nevertheless, the price did find some sellers in that area, and we forced the price back to the downside with the current data staying below the 100-hour moving average at 126.92. Keeps the sellers more in control. It would take a move above the 200-hour moving average, 127.05-ish type area to really take the bias and put it more in favor of the buyers. Once again, we'd probably see some short covering on the break back above that level. But right now, the sellers are more in control. The 50% midpoint of the move up from the December low to the December high comes in at 126.62, and that's the next target on the downside. So there you go, a look at the three major currency pairs to start kickstart your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.